All right, hey there. Good morning, everybody. Sorry about that. Couldn't get the man. This software, I'll tell you what, has been a pain in my rear end. Hopefully to get something better here this weekend. But anyway, couldn't get it set up there. There we go, though. Now, Chris Franks with Texas West Capital coming at you live from an overcast. Looks like it wants to rain here, Bernie, Texas, on Friday, the 2nd of September, 2022. It's a few minutes after 11 a.m. Hope you guys are doing well. I had the jobs report this morning. Basically what they were looking for in terms of jobs, it was slightly more. They're looking at around 298, 300,000 jobs to be added. Came in at 315. So pretty much in line with expectations. But the kicker was that the unemployment had dropped. The unemployment, or had risen, I'm sorry, from 3.5 to 3.7. So we'll take a look at here in a bit. But as I've talked to you guys about, we're at that historically kind of that level at which unemployment generally, gets to and then decides it needs to go higher. And so this is something we've talked about a few times over the, I guess throughout this year here, watching, it get to this level. So from 3.5 to 3.7 now, participation rate increase, which is likely the cause of that unemployment increase, but nonetheless, still something needs to be watched. Average hours, average earnings, month over month and year over year are down. They did not reach expectations. They've dropped. And so these are the things. I think if you're the Fed, I think what you're really kind of looking for, more so than even the employment numbers, the job creation, is that you're looking, because they're thinking about in terms of the inflation, right? So they're really looking at this point, I think, at wage growth. And so seeing wage month over month and year over year drop, as well as the average hours worked dropped a bit as well in this report. So I mean, the only real kind of thing, the headline number, we were right in line with that, but other than that, all the other stuff underneath there, and then of course a little bit on the actively searching there, right? But the rest of it's all down. And I think those are the things that are really kind of mattering now at this point, especially because the numbers were in line with with what we were looking for as far as job growth goes. And so I think, that's a big reason why we're seeing, stocks rallying, we're seeing Bitcoin rallying, we're seeing the dollar pulling back rather than the opposite. So, we'll kind of talk about that a bit there and see how everything's going. How are y'all doing? Everybody doing all right? Chris Day, good to see you, buddy. HJ is here. Nay, Mr. Wilkes, good to see you. Who is that? Deadly123? What's up, man? Poison's here. Hank's here. Chris is here. What's going on? He said, why we pump? Because unemployment, pep betting on Fed pivot closer. Okay, yeah, so there we go. That was kind of what I believe is going on there and why I believe that we're probably pulling back here. But, to take it another way, if you look at the charts, this is something I did with Discord last night. I gave them a video discussing the charts and the charts signaling what may be happening, right? So we had the huge unemployment, the huge rally in unemployment, job creation there last time, right? So we were expecting 300,000. We got like 550,000 or something like that. Huge surprise to the upside. And then this time we're just kind of in line with a much lower figure, right? So we're basically cutting it in half almost from what we had last time. So job growth has shrunk, right? More people are in the market looking for jobs now. So unemployment is rising, and this kind of starts saying a lot. When you're thinking about inflation at this point, you're thinking about, okay, well, inflation leads to growth in wages, right? Everybody wants to use the word inflation, right? We're talking about the rise in prices leads to a rise in your wages, right? It's generally what happens because you got to keep up with it, right? And so, the Fed, I think, is more concerned about that wage growth kind of spiraling out of control and heading up, even as inflation, does its thing. And so, seeing it pull back is I think, something significant for the Fed to be watching. So what happens next interest rate hike here, right? The next meeting, right? We'll talk about that in just a minute here. Don't forget, guys, you can join us here at howtotradetowin.com. Here in about the next week or two, we are revamping Tier 3 into a full-on group kind of coaching tier there, and the price is going to reflect that. So it's exciting times for us. You're going to get much more. Instead of just kind of showing you how things are done, we're going to actually put it more and more together. How do you actually use it to create a living for yourself? How can you use it to get funded with a prop trading firm? Those types of things. That's what we're going to do. So we're going to sessions on trader psychology, and then of course we still have our weekly sessions where we do Elliott wave, and then another session we do Wyckoff, and another session we do price action, and all these things kind of just all kind of coming together. Just to really kind of take you in it, even if you've never traded before or if you've got years of experience, kind of bring you into this to kind of hone what you're doing to get to the point where you're effectively trading for income day in and day out, and you're being, you're getting the results that you're kind of looking for. So that's what we're going to do there. So it's exciting, right? Let me see here. So right here we've got Fred. This is the St. Louis Fed. Government data here, right? These are the unemployment rates, or the unemployment rate, right? And so as you can see here, generally, we had this 3.5, and again, 3.5 over here where we've been. We come to the lows over here again around, I can't ever get it all the way down. I always kind of skip right over it, but right there around the 3.6 or so, 3.8. Over here again, 3.5, 3.4. Over here, 3.7. And then we get back over here, 1953, where we had 2.5 or so, right? But basically, when you're hitting this 3.5 area, that's historically that point at which things start ticking up, right? So let's kind of jump this over here, get a little close up. So we had it right, we had this rally. Remember when this happened? The unemployment jumped to 14.7%. That was after that. That was that pandemic thing. So that was that whole everything shutting down, and that was a lot of service and gig-based workers, losing their jobs there because everything got shut down, right? Restaurants and everything else. And so that's steadily come down here, and here we are 3.5 in July, and now we're up to 3.7. Now, to be sure, there's, sometimes there is that, let me see if I can find one here, a push up higher, right? So we had from May 21 to June 21, we had 5.8 to 5.9, and then it continued down. 3.9 to 4.0 here in January of December of 21 to January 22. But the importance of where we're at, that 3.5 level, is significant. And I think, this may start seeing this roll up. This is what I've been talking about here lately, guys, that we get this move up in unemployment, right? And so if unemployment starts raising like that, the Fed's going to be really kind of snookered there about their raising interest rates, right? Because there was the big talk at Jackson Hole, but at the end of the day, if unemployment's, getting up there 4%, continue like that, and the Fed's continuing to hammer the inflation thing, so then you have inflation and you have unemployment both rallying there, the Fed's screwed. I mean, it doesn't look good for them, right? So, they can talk all big about pain and all they want, but at the end of the day, they're not going to be happy continuing doing what they're doing if unemployment continues to rally, continues to rise. So, that's one of those things we're kind of looking at, right? If we look at the target rate probabilities here for the Fed meeting, for the next Fed meeting coming up, this, of course, here is with the CME group here. You can look back here. So we go 1 month, 1 month ago, 1 week ago, yesterday, and then today, right? So this is the probabilities, how they've gone. From a month ago, this is a 75 basis point. This is a 50 basis point hike, okay? So right now, as of today, as of this morning, we've dropped since yesterday. You see, yesterday they thought 75%, right? 75% chance we're going to have a 75 basis point point rate hike, right? And today that's down to 58%. And that's with us hitting the employment numbers, right? Being right in line with them. So that tells you there's something else going on there, and that something else is what I was talking about, the month-over-month, the year-over-year wage decrease, as well as especially that unemployment rising from 3.5 to 3.7%. The 50 basis point rate hike here jumped from 25% yesterday up to 42% today. So as you can see, this 50% dropped down as we were getting more information in, right? We got the jobs number, and then we got the CPI, And then now we're getting this jobs number again, and so now it's starting to rise, right? And your 75% was rallying, and now it's pulling back. So we'll see. Just a 58% chance now, just over half of it, thinking that, hey, might go up to 75 basis points. So this is liable to change here as we get more of the numbers in, especially the CPI coming out next month, or this month, I guess, which will happen, prior to that Fed meeting, right? And so remember, last month, the report, we were already expecting a big drop, and we got an even bigger drop, so a surprise to the downside of a already anticipated big drop, right? So dropped even more significantly. So again, we're going to be watching what happens this time. If CPI isn't rallying this time, if it's holding steady or dropping, I think much more likely 50 basis point than 75 basis point. Fed could still come out and surprise us and go 75 anyway, but I think, the information is going closer and closer toward that 50% that I've been talking about. So we'll see how that goes there. And that's good, as far as you talk about risk on assets, because as this starts dropping, as we look at the Fed lowering its increase in Fed rate, it's not dropping the interest rate. It's still overall rising, the Fed funds rate, right? But it's rising in smaller and smaller increments, which shows us a slowdown, which then suggests a reversal, right? Well, when's the reversal coming? Prior to Jackson Hole, everybody's thinking 2023, right? And then Jackson Hole hits, and everybody's like, oh, well, now 2024, right? I still think we've got 2023. And I think, continuing on with this is going to show us that. So we'll see. We'll see how this continues to go. But if we're doing this and we start to get the slowdown in the rate hikes and eventually get that reversal, I mean, if you're the market, if you're a risk on market, that looks good to you because things become cheaper. Inflation's dropping, things become cheaper for people to get. Now, that's just one part of this whole thing, right? You've got, who's unemployed, you've got inflation, as far as prices go, you've got wages. So there's a lot of moving parts in there. But, when you're looking at it, that inflation right now dropping off, that's such a headline thing that if we see that start pulling back and then we see the Fed funds rate, slowing its rise there and eventually even pulling back, that should give some support to risk on assets there. And, people pulling money out of the dollar, putting it into, stocks and Bitcoin, stuff like that. Okay? So that's kind of what my thinking is at the moment here. Let's jump over here to Bitcoin. So here's what we got, guys. There's still possibilities. Could still be a bearish push lower. Depending on how you want to count this, but the levels you want to go through, you want to get through the swing high up here, this wave circle one swing high at about 2582.5 or so. If we can pop out above that, you do have this bit of this orange supply structure here, but I think we rally up at least to the R1 pivot here on the 4 hour, which is right around 21,150 or so. Beyond that, I think you get up here toward this kind of range. So you've got this 21,454 to the daily pivot around 21,6. I think it becomes your next target. So this big descending channel resistance, right? We get this bullish, this impulsive breakout above it, right? Nice large bullish candle, large volume on that breakout through it, right? Right now we're finding resistance at the 4 hour pivot, so we need to see another impulsive breakout above that. But I think if we do that, I think ultimately if we pop out through that 4 hour pivot, minimally that 4 hour R1 pivot, but probably closer to the daily pivot. And then if we can do a bullish breakout above that, I think that's all she wrote. Bottoms in, we rally up, through this 25,215 level here. I think we break out above that. So this gives us potentially the idea that we've got maybe, I was looking at this as a 1-2-1-2, but I think maybe now we're going to look at this as just a leading diagonal here, a 1 and a 2 on that pullback. And so then that gives you a, wave 3 target. If this is to hold there and break out above wave 1, that means we should be looking at wave 3. Oh, can't see nothing on this. Too much writing on this shorter time frame here, or on this larger time frame. There we go. Right up here at around 31,887 or so. That would be wave 3. And so your minimum expected. I mean, now it can overextend a long way, and it probably would. If we do that, it'll probably overextend, and we'll head higher up there. But for right now, wave 3 right around there. Now, again, I do like the breakout, the impulsive breakout here, but we do need to see some follow through that 4-hour pivot, and then we do need to see a follow through that daily pivot. If we can do those two things, again, I think there we go, right? Now, if we do break down, we've got some general targets here. Upper half of the purple range here, which is about 19,075 or so to 19,250. Dropping down below that. For right now, I don't know. We're getting kind of close to the end of the week, so this pivot will probably change depending on how long it takes. But until it's gone, we've got the S1 pivot here on the 4-hour at around 18,740, and then continuing to follow through there, we've got this large blue demand structure here, the EQ right around 18,245. So those would be those levels I'd watch on the way down. If we do break down below the swing low, I think it gets us closer to 14,000 if it plays out as we would generally expect. But again, if this is a bottom building here, right? If this is a base building here, then there's a good chance we could get just a dip below, like if you look at this as a range, it would just be like a spring below it and right back up, and you catch all the breakout traders and the shorters and whatnot, immediately put them underwater. Everybody freaks out as price starts rallying, and then they have to go cover their shorts and go long, adds even more juice to it, and it flies back up, right? As you can see right now, we are in this high volume node. We're actually at the top of this bottom half of it, right? So again, we get up through that, up through this 4-hour pivot where we're at, rallying up here into this upper half, which is where that daily pivot sits up there. So again, that's just the general way I'm going to be looking at this as we do it, okay? So let me see here. Let me see here. Is this chart anything different? Yeah, it's not. I gotta see where we're at here. Gotta find the right chart. So we've got the CME, right? So maybe the CME is a clearer, cleaner chart potentially, right? What do I see here on the CME, the Bitcoin futures? I see this potentially as a leading diagonal. It's shaped a little bit differently, but it hit the low here on June 30th, whereas the spot hit the low back over here on June 18th, right? So they had this further way down after the spot had already hit low, but it still looks like same idea. Still looks like a leading diagonal coming down here. I mean, I can count an ABC down to finish this off here, and then we've got the big volume coming on the breakdown here in this wave C. So again, usually your big volume comes in wave 3 or wave C. And so in this case, you're getting wave C, capitulative type volume coming down. And then we do this sideways and potentially maybe ready to break out here. If this is a 1-2, as it looks like it may be, wave 3 as a minimum expected target up there, 21,345. We break down below the swing low on, on spot or on CME here. Then in either case, it's done, right? The count's invalidated. But I think maybe the count might be looking a bit more easier here on, to count here on the CME. If we look at this same kind of channel idea, excuse me, then again, we do have this breakout on volume and a large candle there breaking out above it. Want to see it rally up. Remember, your pivots are going to be different as well in the CME because, your price action is different. But ultimately, looking at this as a range, and, if this ends up being accumulation here, it's too early to tell right now. But if it does end up being accumulation, this would likely be a last point of support rather than getting a spring. Your last point of support, and then you just start seeing some movements up and breakouts up and higher. What you're looking for is a breakout up above this area up here. Large candle spread, large volume. That'll be what we call your jump across the creek, which is just basically an impulsive breakout above the overhanging supply, the resistance. And so you break out above it. Usually you come back, test it as support, then rally up higher. But that would indicate that the range is done and we're headed up higher if we get that. So, yeah, that's what we're looking up there, guys. Dollar. Let's go look at the dollar here. So, dollar's getting a bit of a rally here, isn't it? But so I had to change this because we went up higher here. We broke out above the previous swing high here. So 3, potentially 4, and 5 here. And then with this, maybe a triangle. So A, B, C, D, E is a triangle. And then 1, 2, 3, 4, 5 potentially, right? Coming over here, you got maybe like a 1, 2, and then a 1, 2, 3, 4, 5 gives you 3, 4, and then 5. And so this could be ABC, ABC, and then 5 up. What you're looking for ultimately here is for this to hold, and then for us to break down below 108.379. If we can do that, that's going to kind of hint there, give us a decent bit of a clue that that wave 5 may be done, right, and heading lower. Let me see this other chart here. What's going on, Brian, Sylvia? Good to see you guys. Let me kind of jump out here to the daily. Again, you know, what we have a peak out, and we're getting this inside bar here on the daily, which could suggest, you know, would generally suggest that we may be dropping back, right? So if you look at the daily, what you want to see is a breakdown below this swing low, which is right around that daily pivot. And if you can do it impulsively, even better. But that's the first thing you need, and then you need to drop below this swing low over here. Yeah, 104.520. And that would really kind of signal, okay, I think we're probably done here. Let me see, is it this chart I'm looking at? Yeah, so let's look at this count. So I kind of just went a clean count here. I kind of took the weekly dollar chart here, right? So this is the low on the dollar here in March of 08, which was right there during that financial crisis, great financial crisis, right? So we get us as a 1, 2, and then 1, 2, 3, 4, 5 gives us a 3, flat as a 4, and then potentially 5 being done, right? So 5 has an initial target of 110.373, a secondary target of 112.205, based on the height of what would be wave 4 here. If we zoom in a bit, by the way, you'll notice here on the weekly, we have a bearish divergence right there, and then we got bearish divergence forming again right here, right? So if we look at this, we can actually get 5 waves done, right? And so right now, we're pretty close to that initial target right there. And as I showed you on the shorter time frame, we can get 5 waves up from there, right? As I showed you on this chart, we can get 5 waves up to finish, right? Here we are kind of pulling back at that 15-minute pivot, you know, kind of what you would expect. So, let me see, wrong chart here. Yeah. So again, if this count is to hold, then what we're really looking at on this weekly time frame is a breakdown below wave 4 here at 104.636. Now this is the futures. No, this is the DXY. So yeah, so we want to see a breakdown through that. That'll take us below the, the 23.6 here retracement, and that should send us lower. Lower means, I mean, we could see 101, but I think we're probably going to see, and 99 even, but I think we'd probably see closer to this 90, 94.925 to 60 to 97. I can't even say it, 96.67. I think that would be the best target right there. As you can see, we've rallied up through here. Almost hit the R4 pivot. If you guys will remember, back in this time here, December last year, January this year, I said if, this is that same thing I always talk about. You come in sideways between the pivot and the R1. If you don't come back and test that pivot, instead you just break out above the R1 and keep rallying up toward that R2. That's a very bullish movement when you're trading pivots, and that usually indicates price will at least get to the R4 area, if not the R5. So, if we're done, we're pretty close to that R4. If not, we've got those 2 targets just a bit higher up there. We'll just have to adjust the count some. But I think definitely looks like we're probably closer to an end of the rally than not at this point. So the question then becomes, is this just 1 of 5 or is this 5? And that's the real question, I think, right there. So if this is just 1 of wave 5 here, right? So if this is just 1 and we get a 2, again, I think 2 is going to pull us back. At least I think the 50%, but more likely closer to the 61, 870 and a half area. if this is done, then we're done, right? We're gone. So we'll see how it plays out there. But, the dollar falling back would mean people are pulling money out of the dollar, putting it somewhere else. Usually that somewhere else is risk-on assets, like, stocks and crypto and stuff like that. So that's kind of what I'm looking at, guys. Esteban, what's going on, man? Let me see here. So that gets that. Let me see. It's the dollar. What else we got here? Oh, let me see here. Oh, we can look right here at the E-minis. And so here we go. And again, the idea that that maybe that the other stuff, the hourly wages, month over month, year over year, the hours worked dropping, those wages dropping, especially those wages dropping, and then unemployment rising, so we see that we've continued to rally here, right? Now, I'm going to do something a little different here. I've got some other charts here. So we're looking at, y'all always ask me, what if the bottom's in and how might that look, right? So let's talk about that. We've talked about Bitcoin. We've looked at the dollar. So let's look right here at E-minis that we just talked about. So, we've looked at a 5 count coming down maybe as a leading diagonal, right? But you can potentially, as I've been talking about, you can potentially count it as an ABC. Okay? And if that's an ABC, then I can count 5 waves up. Again, it's just how do you count that overlap, right? So instead of 3 waves up, 5 waves up. And then down here becomes ABC, which is W, and then X, and then ABC, which is potentially Y. That's a nice daily, almost a hammer candle right there. We're getting a nice bullish candle here, especially if it can close up even higher. So what would we want to see? We want to see a breakout above the daily pivot and then above wave X up here, which is that R1 pivot area. If we can get that, I think we're all but guaranteed to break out above wave 1 here, and that gets us moving up. Wave 3 has a minimum expected target of 5,020. Now, again, is this wave 5 or is this wave 1 of wave 5? This is something we would have to see, right? If the dollar is topped out and that's it, then this is likely just wave 1 of 5. Which means, if this is just going to be wave 5, then I think we've maybe got some bullish rallying up into probably the beginning of next year, right? If this is just wave 1 of 5, then I think we've got potentially a couple of years of rally. And so, it's not only here on the S&P. This is the NASDAQ 100 here. Again, same general idea. You can get an ABC out of this, right? And then again, you can probably count a 5 up here, and you're still looking at the same ABC up, ABC down. So another WXY. Retracement, again, around that 61.8. Looking for the breakout above the pivot and then above wave X. That should all but guarantee we're getting above wave 1, which gives us a minimum expected wave 3. Oh, man, this is the same. Sorry, guys. That's the same one. Oh, it's a long day, guys. Get ready for a long weekend. But same idea here with the NASDAQ. We'll try this one more time. These are all the E-mini futures, by the way, guys. You can trade all these. But this is NASDAQ 100. So, again, WXY potentially. And then 5 up. Again, that whole WXY on the decline, right? So 1, 2, 3, 1, 2, 3, right? So ABC gives us WXY. We're having a little issue right now. So we got this great candle yesterday, kind of a candle right here, but we'll see how the day plays out. But again, want to see fall through the pivot and then wave X up here. If you can do that, all but guaranteed that you're going to rally up through wave 1, which gives you a minimum expected wave 3 at 16,351.75. Moving on to the Dow, right? Same idea. 3 waves down, potentially 5 up. I just don't have it labeled here. But again, same idea, ABC there. Retracement of about 61.8. Everything's same, right? And on all these guys, if you go look at the chart, you'll notice that it's kind of this area right here, right? So the other ones, it's a little bit cleaner. the resistance hitting the support, but basically support, resistance, support. That's what you're getting there. So, breaking out above the pivot's the first step, and then above the wave X up here would be the second step. All but guarantees you break out above the swing high, which would be wave 1, which gives us a minimum expected wave 3 here at 38,698. Wave 5 then minimum 40,000 and a half basically. So there is a story here for potentially heading up, right? So I figure, okay, well, if I'm going to do that, I might as well do it here for oil as well, right? I've been talking about oil lower. If I have to try and find a bullish count for it, this would be it. Basically, I'd have a ABC down as W, X, ABC is Y, and then we have A, B, and then a WXY for C here for wave X, and then AB and an ending diagonal for wave C of Y. So what we want to see, first of all, break out above the daily pivot, and then above wave 4, which is the R1 pivot. You notice on all of these, guys, that you want to see a breakout above that daily R1 pivot. That's where those key areas are. So if we get through that, that's the first step, and then you want to get above wave B up here, which is 114.05, and then you're potentially heading up higher here, right? So at this point, if this was the low and it's in, you'd be looking up here around, initial target 144, secondary target up there about 169 would be where you'd be looking. So if you need that alternate count there, if you need a count that says, well, yeah, this could potentially do this, I think there's your count. But again, it just kind of says we got this up. I still don't see 300 or anything like that happening. People have been talking about, but it could change as things continue to go, right? Euro is nosediving. That's why we can't have nice things, Hank says. I got lots of nice things, Hank. Oh, wait, I'm on the other side of the trade. My bad. Well, didn't you say all yours was, didn't you say all or most of it's in dollars anyway? So, I mean, you should be good to go, right? Let me see here. Where are we at with, let's see here, with natural gas. Let's pull up some natural gas here, guys. What do you think? Let's look up nat gas. Oh, dodged on it. What is that? Oh, is it NC? Oh my gosh, brain is completely just dying on me at the moment. NG, jeez, oh whiz. I don't want to say C. Try this one more time. Load. There we go. NG, Chris, nat gas. Jeez, oh whiz. There we go. That's what I'm looking at. WattR21, Andrew Bennett, good to see you guys. Let's see here. So here we go. Nat gas looks like we're headed down further. I've got this right now as a 1-2-1-2. Wave 3 is a minimum expected target. Wave circle 3 of 7.939. So if that's going to be, then that's what it's going to be. Yeah, that's what I'm looking at. If we are to break out above wave 2 up here at 9.711, I think that invalidates it and says maybe we head up higher. But for right now, we are where we are with that, on that, I believe. Looks like an ABC flat on gas. Well, you have to go to what's prior to it. You see, I don't think that's a flat there. Again, I'm looking this as 3 up here, A, B. So the flat is actually here is what I'm looking at. And so B is just this WXY. And then we want to break down below X here at, what is that? 7.532, which takes you below that daily pivot. I think I got that daily pivot set right. Let me see. Nope. Move that daily pivot back up here. We just dipped below the daily pivot, actually, on this. So, yeah, but, getting down below that should signal then we're coming down. And then, wave C ends up, coming down here probably about $4, $4.20, somewhere around there maybe, based on it is. Fadi, what's going on, man? He says, Russians stopped the gas to Europe now. I haven't seen anything on that yet, so I don't have anything to comment on that at the moment. I don't think that I know there's been this thing about Germany running out of gas. I don't think that's actually a case there. I think it's just they say that because prices and whatnot, but you guys have to remember when you're trading futures contracts, you're not actually tracing the asset itself, right? And so you can get kind of wonky with pricing on that. So we'll have to see. Let's see here. Silver. Is silver finally doing its thing here? Are we finally getting that reversal we were looking for? Let's see. Diego, what's up, man? Yeah, I talked about the NFP first thing, buddy. Sure did. Look at that now. Nice. Nice, right? So we've got this nice impulsive breakout here. Volume expansion, candle spread expansion as we broke out through the descending resistance. Our first target was the EQ of the range. Breaking out impulsively above that gives us a target of the channel resistance. Breaking out impulsively above that, wants to see it rise above wave X here at 19.345. And again, if silver and gold are doing this rallying, then the dollar should drop back, right? In general, they kind of run reverse, right? So I would expect more or less for the dollar to continue back. So again, you have more of this this support for the idea that maybe the dollar might be topped out, at least for a few months, at least, right? Which again, even for a few months, leaves the ability for the other what are they called? Risk-on assets to kind of rally, right? So that's what we're kind of looking at there, and gold looks pretty much the same. Let's see here. There we go. Gold. Look at gold again doing the same thing here. If you're with us, you had some great trades this morning rallying for gold and silver on that. Oil down. Nat gas, little drop it had. A lot of good trades with our daily updates and intraday updates. But here we go. Rallying impulsively up to the EQ here. We're above it. We want to see a target now of the descending channel resistance. And then if we can break out impulsively above that, wave B up here at 1778.80. And again, that just, this is an ABC, right? So A, B, C for wave 2, and then we expect it to head further down. So, maybe heading up there around that 1880, 1890 kind of area. As it continue, if we get the breakout here and we continue to rally above wave B there. Silver is actually printing a flat, so it's A and it's B, an expanded flat, and then C will pop back up there for that. Let me see here. Other than that, what else have we got going here? We got, we talked about the NFP. We talked about these charts here. Let's see. Here's some interesting news. What we got here? What's this? Crypto CEO behind 2.5 billion rug pull arrested. Faces 40,000 and a half years in prison. Oh, Lord have mercy. So that's the Thodex crypto exchange, I guess. Honestly, guys, I never even heard of that. They collapsed in April 2021. He initially claimed a halt in trading was due to cyber attacks and investors' money was safe before disappearing. Almost immediately afterwards, Turkish police arrested dozens of employees and seized the firm's computers. It said that he had actually moved about 125 million worth of Bitcoin to Kraken. Oh, man. Looks like straightforward theft from a failing business. Let's see here. Man. Large-scale fraud. It says we should note that roughly 90% of the total value lost to rug pulls in 2021 can be attributed to one fraudulent centralized exchange, Thodex. Man, oh man. That works out to an estimate of around 2.5 billion of crypto. But other estimates given by Turkish authorities are lower. So it is what it is. But man, that's crazy. That's a lot of time in prison, guys. I don't know about you, but I'm too pretty to go to jail. What do you guys think? You too? Let's see here. Of course, with the dollar and its push there, the rally for the yen, the dollar against the yen there. So the yen hits that 24-year low, right? And so we're kind of at that 140 area for the USD yen. Again, someplace that we haven't bid since 24 years. What was that, 80, 90, 98 or so? What does the Bank of Japan do now? They've been very accommodating, saying they're going to continue being very accommodating. I don't know. Inflation there seems to be, I don't know that it's necessarily accelerating rapidly or anything like that. I think it's just kind of spreading out more so throughout the economy. And so if that's the case, then, I don't know. Do they step up in, I think they at least step up and say something. They're a central bank. As I've talked about, the biggest asset that central banks have is their mouth. And they kind of threaten or warn what they're going to do, right? And then the market, everybody does their thing because they're like getting prepared for that. And then that takes everybody back up off the cliff, right? I don't know that necessarily jumping in and doing anything is actually going to help at the moment. Just because, the decline of the yen is really just a product of the monster, moves that the dollar's been making over the last year and a half, almost 2 years. So I don't know that there's really a whole lot that Japan can do to combat that. But again, we're reaching these milestones, these areas, these levels, and the dollar may be topping out. So the Bank of Japan may not have to do more than pay a little something. And then, of course, they'll pull back and they'll say, "Oh, look, it was what they said," and really, we'll know it's just because the dollar pulled back, right? So, interesting stuff going on there. I think the bonds, I think they're in a bear market now, and that's the first time in what is this, 2022? So probably early 90s. So probably about 30 years or so, I think. And so that could get interesting as well. Again, it has to do with everything else that's going on. Again, we're hitting these milestones, these levels that we haven't done, in 20, 30 somewhat years. So things look pretty interesting, right? And of course, we're just talking about bear markets, it's just that 20% loss, right? I mean, generally accepted, a bear market is a market that loses 20% of its value. A bull market is a market that gains 20% of value, right? And so, that's kind of what I think we might be looking there, right? Let me see here. It looks like it says data from NYU, which tracks the return of U.S. Treasury bonds and BAA-rated corporate bonds, shows this is likely the worst year for U.S. fixed income since at least 1928. Y'all know what happened, right? 1929 was the start of the, it was 28 leading into 29, and then we got the Great Depression, right? So, I don't know. Again, that's still the main thesis unless we break out higher, right? Unless we break out the recent swing high and then, of course, take out the all-time high. But as long as we're below the recent swing high in those indexes that I showed you earlier, the level we have to get through, unless we're, while we're below that, we still look lower. I mean, there's no two ways about it, right? Let me see here. Yeah, so the yield on the 10-year Treasury was about 3.24% shortly after that release of the jobs report, and that's up about 1.5 percentage points on the year. Yields move in the opposite direction to prices, of course. You guys know that, right? Let me see here. Here's another article. Let's see, what are we looking at here? August jobs report, job market falling back to earth. Unemployment rises to 3.7%. Of course, that's what we were kind of talking about earlier, right? So we had the unemployment there from 3.5 to 3.7%. The number of people working and looking for jobs shot up by nearly 800,000, with many of those on the sidelines streaming into a favorable labor market. I think I mentioned, guys, that the student loan pause has been extended through the end of December. So student loans, people start having to pay in January. So frees up a little bit of money before then, but hey, what are we doing now, right? You got companies laying off people left and right. You got companies, slashing, like I said, laying off people left and right, slashing their workforce 10%, 15%, not hiring new people. So if you're coming in looking for a job into a labor market where corporations are actively laying off people and pulling back on their hiring, I mean, you're kind of screwed, right? And then what happens to the student loan stuff there in January, right? So, I mean, you kind of really need inflation to pull back a lot so that businesses get a little, feel a little bit better and people feel a little better and start spending more, to kind of make sure that, there's some jobs there. Otherwise, I mean, what are you doing now, Can you take out a student loan now and get it forgiven? I don't think so. The way I understand it, if it's going to happen, it's for loans that were already taken out. But even at this point now, there's still a lot of questions about the legality of Biden actually doing this. Does he have the authority as, the president to actually, forgive student loans or whatever? I just saw a report that said that forgiveness of student loans is going to amount to about a $2,500. It's going to cost everybody around $2,500 on average. So yeah, kind of crazy, right? So yeah, it's kind of crazy the way it is. As far as forgiven goes, in order to get loans forgiven, basically you have to be working, for a nonprofit. And that's where you would get the loan forgiveness on that. It has to do with no, you're talking about the 10%, right? Or $10,000, right? Yeah. That just has income requirements. Like I could never, take that. But especially if you're making under $75,000 a year, I think you get that full $10,000. And then if you've got Pell Grants and loans or whatever, I think it goes up to like 20% or something. Don't quote me on that. You'll have to go check it out. But talk to your if you guys have student loans, talk to your processor. You've got a short amount of time to kind of claim some of this stuff that's going on there. Excuse me. According to every president, the power of presidency is unlimited. It's not just the idiot before the idiot in office now. It was the idiots before them too. All right? Let's not play these silly games and think that one side is better than the other. That's silliness. They're all in it for themselves, guys. Government is never, positive for you. They're always taken from you. Let me see here. We got, I was talking about hiring, right? Hiring slowed in August as unemployment rate ticked up. Fewer Americans found jobs in August, signaling the labor market may finally be slowing along with the rest of the economy. Then we talk about, of course, employers added 351,000 jobs, down from, I thought it was 315,000. I think it was 315,000. Anyway, down from that 528,000 last month, which again keeps it in line. Unemployment, again, up 3.7 from 3.5. Let me see here. The economy is still adding jobs at a rate higher than the long-term average, and job total is now 240,000 higher than the pre-pandemic level. But again, when we get to these levels, as far as the unemployment goes and whatnot, usually that's an indicator that things are going to turn around, right? We've kind of topped out basically. So we'll see here, right? Let's see here. While the government estimates that the economy shrank in the first 6 months of this year, an informal definition of a recession, employers have had an average of 440,000 per month over the last 3 months, which is this blockbuster figure. But again, slowing down now, kind of with all that. So, we've talked about the housing market quite a bit. And so here's a little something here. I forgot to share this previously. Pending home sales suggest that maybe an end may be near. So, in case you didn't know it, pending home sales there is the leading indicator for housing market activity. So, those are pending home sales, like mine. That's in there right now, right? So they fell less than expected last month. And sales may soon stop collapsing as mortgage rates settle below recent highs. I think I'm seeing that mortgage rates are starting to rally again, though. But again, if depending on what the CPI comes out with here another week or so, we could see mortgages pull back again, right? It says, but even if sales stop plunging, experts still aren't sure how soon the market will recover. And it really depends on where you are. Some markets are still, believe it or not, still raising, guys, still rising. But a lot of markets are really feeling that pinch and pulled back. And overall, the market is pulling back overall, I think there's some areas in Florida that are still doing well. But yeah, I mean, like Houston's definitely pulling back after having a good rise over the last 2 years or so. What I got here, National Association of Realtors pending home sales index, which measures home sales based on contract signings, ticked down 1% to 89.8 in July, with transactions falling 19.9% year over year. What does that mean? That means people backing out. So almost 20% have backed out over this last year, right? Of course, a lot more of it being last few months rather than the beginning of the year when things were still kind of hot, right? So it says, rising rates along with record prices pushed housing affordability to its worst level since 1989 in June, according to the NAR, with a monthly mortgage payment on a typical home surging $679 to $1,944 from a year ago. Let's see here. Worsening affordability has curtailed demand, with pending home sales now 27% below the peak in October. But the respite in rates has many experts predicting the housing collapse may soon come to an end. So again, still kind of watching, really not sure. Yoon over here says that we're witnessing a housing recession in terms of declining home sales and home building, but not a recession in terms of home prices. I'm okay with that. I got a good deal on mine. So I'm okay with that. Let me see here. Richie LaBamba, what's up? He says, yeah, my daughter getting $20,000 knocked off Texas A&M degree. Gig 'em, right? For $2,000. That's not bad at all. She got a lot of scholarships and grants. Man, congrats to her. That's awesome. Would have been more going back for her master's now. Okay, awesome. Well, good luck to her getting that all done. That is definitely something to be proud of, man, for sure. Hey, Nevlusian, good to see you checking in. Deadly says, less government, more respect for the American people. So let me see here. Yeah, so, again, kind of looking at all that. Here's something else that's interesting. Okay, so let me see here. If we look here at the consumer sentiment, right here. So now it advances to the highest level since May. Now, it's been at the lowest level in quite a while there recently. So, the fact that it's kind of advancing says that people are becoming more positive about the short-term outlook. That's what we're kind of looking at here. So when you say short-term, you think it may be, December, January, February, around that time. What does it say here? U.S. consumer confidence rose by more than forecast in August to the highest since May, suggesting that Americans are growing more optimistic about the economy amid falling gas prices. Yeah, around here, gas is back down. I just saw it the other day here at about $3.13. It was like about $4.50 2 months ago or so. The Conference Board's index increased to 103.2 from a downwardly revised 95.3 reading in July. The first increase in 4 months. The median forecast in a Bloomberg survey of economists called for a rise to 98. So 5 points over that, right? Measure of expectations, which reflects their 6-month outlook, advanced to 75.1, while the group's gauge of current conditions also climbed. So again, people becoming feeling a little bit better about the economy here, at least in the short term, right? And so we'll see if that can continue. Let me see here. Looking ahead, August improvement in confidence may help support spending, but inflation and additional rate hikes still pose risk to economic growth in the short term. And again, that's kind of what I was saying earlier, right? we want to see that inflation coming down. We want to see those rate hikes coming down, and then if we see that, that will also increase consumer confidence, which should see increased spending, which, if that happens here in the next month or two, it's going to help out retailers a lot as they go into that Q4 holiday spending, right? Because if we're sucking wind here coming into Q4, retailers are going to suck wind leaving Q4, right? If we can start getting some robust activity, a little, at least more than what it's been, that'll at least soften the blow of a decrease, right, in spending that we may see over, year over year. So yeah. Hackers gridlock Moscow by sending 3,000 taxi cabs to Hotel Ukraine in Moscow. Oh my gosh. Yeah, people. Things they do, right? It says, while the broader outlook is shaky, the labor market has remained resilient so far. Economists expect the U.S. added another 300,000 jobs in August and that the unemployment rate held at a 50-year low ahead of data to be released Friday. Of course, this was from Tuesday, right? And so what happened? We saw that that unemployment had that surprise to the upside. And again, we talked about that being, mostly from that idea that there's more people actively searching for jobs, right? So, yeah, there we go. Let me see here. I think that about does it, guys. We're just kind of getting a pullback here. We want to see this rally up. If we see a breakdown lower, then we've got our lower targets. And that will invalidate this kind of black count going on here. Again, I would be careful with a short on a drop below the swing low here, the June 18, if we get that. Again, the reason being, I think there's a good chance that we could just see it be some kind of spring and right back up, and you're going to get trapped. If we look at the daily Stochastic RSI is rallying pretty good here. The daily is not very convincing right now. We've got, we came in with some big candles and then some smaller candles and some big wicks now, and we're just kind of stuck right here. We really need to see a rally up out of here toward that daily pivot. If we can see that, then I think we get a pullback here, and then we get an impulsive breakout above it. So basically, it works along the lines of maybe like a 1, 2. You'll get a 1, 2, 3, 4, 5 or whatever, right? So basically, what you'll get is a wave 1 up here. So you get like a wave 1, and then a wave 2, and then a wave 3 on the breakout. It's kind of how I would see that. If this is bullish, if the bottom's in here, we should get a wave 1 up toward this R1, wave 2 back toward the pivot, wave 3 on the breakout. Is how it should go. But, right now we are where we are. 3-day has reset down into oversold. 6 days ago we had this big move down. 3 days, over the last 3 days, we had this big boom, big bit of volume come in. And a bit of a rally, but kind of closed back about halfway. You notice we closed right here where we've got this support on that 3-day, right? So again, want to see on this 3-day, we want to see a close back up here and this follow through toward the pivot. Pivot, pull out, breakout, R1, pull back to the pivot, breakout higher. Kind of would be that expected movement of what we'd look there, right? Deadly, I appreciate you, man. Thank you, sir. So yeah, and of course weekly, weekly looks kind of scary, right? We've got this, we broke out and overbought here, and now we're dropping back. But, if this is the bottom here, then, we've shown all those different ways of looking at it, including on every other one, on the last two, right? The bear market low at 2018 and the bear market low at 2015, at the end of 2015 there, right? Or in 2015 beginning. We saw Stochastic RSI rallying up to overbought on the first wave up, and then it pulled back, and then it rallied up higher. So we were overbought, and then we generally stayed overbought or near it as price rallied up higher. So, do we have that same thing going on? We'll see, right? Right now, just going to pull this chart over here real quick. We've been hovering around. You can say, yes, we're below it here, but we've been hovering around the 200-week MA right here. You can see our hash ribbons are, remember, this is capitulation, the gray bubble. The green bubble is recovery. The lime green bubble is recovery. So you got a different green bubble too, which is still part of the capitulation. But when you hit that lime green bubble, it's supposed to be recovery. Now, obviously in this area, we did draw back to capitulation, then higher up. But if this is the bottom, then, you know, like the previous times before, this usually signals, hey, we're headed up, right? MACD, we've crossed bullishly. Let me see here. What do we got? We've got 16, 14, 19, and oh wait, I'm looking at the wrong thing there. 216 there. Let me see here. And that's about 277. So I'm trying to look here. It looks like, you know, we're right about at the same, maybe just slightly under it. But, you know, again, going above it would give us bearish divergence. So it'd be between this point and this point. And so if we've got that, then we've pulled them back here. So that might be doing that, finishing up. And then we'll look to see if we can get that rally. The 21 MA is this blue line. This reddish line is the 21 EMA. And so we've got the MA about to cross below the EMA. Remember, the EMA gives you, it's calculated with more emphasis on the near term, right? So the shorter, it's the faster moving average. So, you know, we'll see what happens with all that. But, again, coming near this 200 as it is as well, sitting right below the weekly S1. Still a lot of different possibilities, guys. We are just going sideways since, well, locally here since June, right? We are on support of this area, so we'll see what we can see what we can get here with this. All right. So that's it, guys. Man, I hope you guys have an amazing weekend over here in the U.S. It is Labor Day weekend, so you know, 3 days, 3-day weekend, Saturday, Sunday, Monday. If you're interested in the coaching, it's going to be amazing. I will have more information on that next week, so be watching for that. And of course, that's just one within all the other things I mentioned we're going to be doing as we head into the end of this year and the beginning of next year. Lots of stuff going on. So, man, oh man, good times, right? ARM, what's up, buddy? So, you know, as always, guys, as always, the only thing you control in the market is how much you lose. That's absolutely it. You know, we look at the charts here all day long. There are no guarantees A, B, or C is going to happen. But what you can do is you can do proper risk management. That is something you can learn and you can actually control. And so while you can't control where price is going to go, you can control, you know, how much you lose when it goes against you. And you can do it intelligently in a way that's going to keep you liquid as you become better and better and better and give you the chance to actually be profitable over time. And then, you know, just become a trader and enjoy it rather than, you know, throwing everything you got at it, high leverage, you know, every single trade, every trade's its own instead of having a system, all those kind of things that work against you as a trader. All right, guys? All right, hey, you guys have a great weekend. If you're in Discord, I've got a couple of the weekly charts to do, and then I will be out for the rest of the day, as I've told you guys, taking it off there for the half day, and then, of course, off for the 3 days on the weekend, and then I'll be back on Tuesday. If you need something immediately, if you get something that just cannot possibly wait until Tuesday, I'm sure Adam will be checking in from time to time. But, you know, again, it is his holiday weekend as well. So give him a little bit of time to respond to you. But if it can wait till Tuesday, definitely a better thing to do. And we'll get and take care of then, okay? All right, guys. Y'all have a great weekend. Trade safe. I will see y'all next week. Take care.